A recession is a sustained, broad decline in economic activity. It is usually caused by a sudden contraction in spending on goods and services. The word recession comes from the Latin word recessio, which means a drawing back or a retreat. A recession is usually defined as 2 consecutive quarters of negative growth in GDP for gross domestic product. The last recession was between December 2007 and June 2009. There are many theories about what causes recessions, but they often come down to 2 factors: supply-side shocks and demand-side shocks. Supply-side shocks are events that cause an increase in the cost of production, such as natural disasters or oil price spikes. Demand-side shocks are events that cause consumers to have less money to spend, such as job losses or credit card debt limits being reached. Let's see how you can prepare for the coming recession. The 2023 recession is coming, and it's important to prepare for it. There are many ways to prepare for the recession and make money off of it. Now that you know that a recession is often caused by an economic downturn or a financial crisis, like we've seen it in the 2008 financial crisis that led to the Great Recession. The next time there is a financial crisis, there will be another recession. So, to prepare to the recession which is coming, you should optimize your personal finances and enhance your savings. Yes, because to weather the challenges of a recession, you'll need to save a good portion of your income each month. You can do this by making a list of your expenses, such as house rent, car payments, insurance premiums, and even small grocery expenses. At the end of the month, add up all these expenses and see if there are any items that can be crossed off the list. In other words, this list gives you data on what you've spent and also gives you a preview of what you're wasting. This will help you grow your savings. If you have already invested some of your money in short-term plans, you need to keep an eye on those short-term investments, and if you find it risky, you can move your money to a safer safe harbors, like precious metals, dividends, stock markets, or any other long-term plan. With long-term investing in mind, you can find cheap assets during a recession and make them your long-term holdings. As your cash reserves grow, investing more in assets, things that appreciate in value, such as stocks or real estate, will pay off in the long run. The key is to invest with a 10-year horizon in mind. During a recession, you can buy more assets for less money. When the stock market falls, it provides an opportunity to invest in or buy shares of good companies at a lower price. The S&P 500 index, a securities index comprised of 500 of the largest publicly traded U.S. companies, fell by more than 20% between January and mid-October 2022. While a 20% price drop may appear to be a loss to a short-term investor, it represents an opportunity for a long-term investor to build wealth. In the past, since the creation of S&P 500 in 1957, the market has averaged a yearly return of close to 10%. The market will rise and fall over time, but for the time being, the market is on sale. Because you're buying stocks at a lower cost basis, it's a great time to consider investing more in good companies with a long-term strategy. The real estate market has also slowed since the beginning of the year, despite the fact that home prices have increased significantly over the last 2 years. People will have less access to cash and credit if we enter a recession. As a result, we will see more real estate transactions, such as short sales and foreclosures. During the 2007 recession, Atia Blair began investing in real estate and has since become a multimillionaire through long-term real estate investing. She emphasized the significance of purchasing real estate with a long-term perspective. So as a conclusion, I would say that you can prepare for the next recession by looking closely at your money, increasing your income and cash reserves, and investing progressively and consistently. Do this, and you may come out the other side in a much better financial position. Here we are at the end of this video. Thank you for watching it. I hope you found it helpful. Don't forget to hit that like button and subscribe to the channel. See you in the next video.